If you're involved in gaming or maybe creating those immersive 3D experiences, you've almost certainly heard of Unity. I mean, it's the powerhouse engine behind so many digital worlds we interact with, really every day. Today, we're doing a deep dive into Unity's latest Q1 2025 earnings report. And let me tell you, it paints a really fascinating picture of a company going through a pretty high stakes transition. We're going to unpack Unity's financial performance, look at their bold strategic pivot towards this brand new AI platform they're calling Unity Vector, and sort of explore what these shifts mean for the company and, its global footprint. Our insights today, they come straight from the source, Unity's Q1 2025 earnings call with the CEO, Matthew Bromberg, plus their detailed financial statements and regulatory filings. Our mission, as always, is to cut through the corporate jargon and the dense numbers, helping you understand the real story unfolding behind the scenes at Unity and what it might mean for their future. So yeah, let's get into it.
Okay. Well, it's really clear right from the get-go that Unity's CEO, Matthew Bromberg, he's placing a pretty significant strategic bet on this new direction. He actually stated he is, quote, very confident that over the long term we'll be able to fundamentally compete in a different way. And he's doing that by heavily investing in what he calls the vector business.
The vector business. So this isn't just like a minor product update then, it sounds much bigger.
Oh, definitely.
Yeah.
It sounds much more like a core strategic shift for the entire company. They're betting big on AI to kind of reshape their competitive landscape.
So Bromberg's talking up Unity Vector as this game changer. He even pointed to, what was it, measurable improvements for customers already. Is that just, standard CEO optimism, or are there actual indicators that this early success is, well, sustainable?
That's a fair question, yeah. It's definitely still early days.
Yeah.
But his confidence in Q1 being the, quote, low point for this business, that's pretty telling. And the fact the team delivered this new system relatively quickly, well, it suggests maybe more than just talk. They're clearly putting significant resources behind it. And that early customer validation he mentioned, that's actually a crucial sign. He also hinted at exciting long-term opportunities that aren't fully utilized yet, which kind of suggests there's a bigger plan still unfolding here.
Right. So the CEO is betting big on AI. But what's the financial bedrock looking like? The foundation supporting this ambitious pivot. Let's dig into Unity's financial health because, like you said, it seems like a bit of a mixed bag, but with some very clear trends emerging. Overall, total revenue actually went down in Q1 2025 compared to last year.
Yeah, that's right.
And this was mainly because of a drop in professional services and consumption services within their Create Solutions segment, plus declines in their Growth Solutions revenue. They seem to attribute these dips to, well, changes in customer demand, more competition in the advertising market, and maybe shifts in where they're putting their resources.
But okay, here's where the financial picture gets really interesting. Despite that top-line revenue dip you mentioned, Unity significantly cut its losses and actually improved profitability.
Really? How so?
Well, their GAAP net loss margin, which basically tells us how much they're losing relative to their sales, it shrunk dramatically. It went from 63% in Q1 of 24 down to just 18% in Q1 25. That's a huge improvement.
Wow, okay. 63 down to 18.
Yeah. And their adjusted EBITDA, which is a key measure of, operational profitability before things like interest and taxes, that actually saw a healthy increase. It jumped from about $78.5 million to almost $84 million.
So they made more profit operationally, even with less revenue coming in.
Exactly. Even their gross margin improved.
Those are certainly striking profitability improvements then, especially given those revenue headwinds. What do you think is the biggest driver behind that shift? And maybe more importantly, is it sustainable if revenue keeps facing challenges?
Well, it's largely down to some pretty aggressive cost efficiencies. Unity significantly slashed its operating expenses as a percentage of revenue pretty much across the board. For example, R&D costs dropped from 61% of revenue down to 51%. Sales and marketing went from 50% down to 37%. And general and admin expenses, G&A, fell dramatically from 39% down to just 15%.
15%? Wow. So where did those savings come from primarily?
A big part of these reductions, particularly in R&D and overall costs, it was driven by significant workforce headcount reductions. In fact, they booked about $14 million just in employee separation costs in Q1 alone, plus another $6 million in non-employee charges.
Okay, so layoffs and restructuring.
They're clearly committed to tightening their belt, and they actually expect more changes like this throughout 2025.
So Unity is, tightening its belt, cutting costs, making tough personnel decisions to boost the bottom line, even while revenue faces headwinds. But this next financial metric we looked at, it kind of introduces a crucial tension, doesn't it?
That's right. What's really crucial here is their dollar-based net expansion rate, or NER. You can kind of think of it as a health check on how much more money Unity is making from its existing customers.
Right. Over 100% is good, means they're growing with current clients.
Exactly. A rate over 100% means they're growing revenue from those customers, maybe selling them more subscriptions or cross-selling other services. So the fact that it slipped from 101% in Q1 2024 down to 97% in Q1 2025, well, that isn't just a number.
Yeah.
It signals that their current customer base isn't actually growing its spend with Unity anymore. And that puts more pressure on finding new customers, doesn't it?
Yeah.
Especially as they try to pivot to this AI strategy.
That's a critical point, yeah. A declining expansion rate means they're not getting more from their existing users, which definitely shifts the focus heavily onto this Unity Vector AI platform to drive new growth. So how exactly does this AI platform fit into their strategy to, say, improve their Grow Solutions business specifically?
Well, the strategic investment in Unity Vector is directly tied to improving the performance of that Grow Solutions business. The plan is, specifically, migrating traffic over to this new AI platform.
Okay, migrating traffic.
Yeah. And while they anticipate revenue improvement from implementing Unity Vector, the company does acknowledge this could be, quote, partially or fully offset by declines in select areas of the business that do not utilize Unity Vector.
Ah, okay. So it's a trade-off potentially.
Exactly. So Unity isn't just, dabbling in AI, they're migrating core parts of their business to it. This really highlights a critical, maybe even high-stakes transition where they're essentially trading off some existing revenue streams for the potential of new AI-driven ones.
High stakes indeed. And beyond these big operational and strategic shifts, Unity is also navigating a pretty complex debt and legal landscape, right? They issued, what was it, $690 million in 0% convertible senior notes due in 2030, just back in February 2025. And that's on top of existing convertible notes due in 2026 and 2027. That's a lot of debt.
It is. And servicing this substantial debt requires, as they put it, a significant amount of cash. Plus, there's the potential dilution from these notes converting into common stock. That basically means more shares could appear, potentially lowering the price of existing shares.
Right, which stockholders never like.
No. So, to manage that potential dilution, Unity is engaged in something called capped call transactions. You can sort of think of these as a form of insurance. They allow Unity to buy back shares at a certain price if their stock rises significantly, mitigating the impact of those note conversions.
Interesting. Have any notes been converted yet?
As of the end of March 2025, no holders had actually exercised their conversion rights. So not yet. And on the legal front, there's actually been some good news for them. A significant securities class action lawsuit, the one alleging false or misleading statements about their product platform and their 2022 guidance, that was dismissed with prejudice in March 2025.
Dismissed with prejudice. That means it's permanently closed, right? Can't be refiled.
That's generally what it means, yeah. So that's a major hurdle cleared for them.
That does sound like good news. But I also saw that several derivative suits filed by stockholders, which apparently borrow similar allegations, are currently stayed.
That's correct.
So while one big legal challenge is gone, others are still kind of hanging out there, albeit paused for now. This really raises an important question for you, the listener, to think about. How does managing a complex debt structure and these ongoing legal proceedings actually factor into a company's ability to innovate and execute on a major strategic shift like Unity Vector?
It's certainly a delicate balancing act. I mean, these factors inevitably consume management's time and, importantly, financial resources that could otherwise go towards innovation or execution. And speaking of managing complex corporate structures, let's maybe shift gears a bit and talk about the human element, specifically employee equity, especially given Unity's global reach.
That makes sense. A company's ability to innovate also rests heavily on its people, right? So how do these big strategic shifts, like the move to Unity Vector and the associated cost cutting, how does that ripple down to the employees, particularly when it comes to their incentives, like stock?
That's a really crucial point, because for a global company like Unity, employee compensation, especially equity, things like stock options and restricted stock units or RSUs, it becomes incredibly intricate. It's not straightforward. For employees scattered all around the world, understanding their equity compensation isn't just about figuring out how many shares they get. It's really about navigating this labyrinth of local tax laws, data privacy rules, currency regulations, things that vary wildly from country to country.
Yeah, I can imagine.
And Unity's own filings clearly show this intricate web that both the company and its employees have to manage.
For instance, I saw the company explicitly states that for employees receiving these equity awards, the tax liability is your ultimate responsibility and may exceed the amount, if any, actually withheld by Unity. And importantly, Unity states it has no duty or obligation to minimize the tax consequences. That seems like a pretty significant point for anyone participating in these plans. It puts the burden squarely on the individual employee.
Absolutely it does. And furthermore, just participating in these plans involves consenting to the collection, use, and transfer of your personal data, things like your name, address, salary, job title, award details to third-party administrators, potentially located anywhere globally. Think Charles Schwab, Equity Plan Solutions, those kinds of firms.
So data privacy implications too.
Big time. It really underscores the deep compliance and logistical challenges for a company operating internationally, but also the personal responsibility for employees to really understand their local rules, whether it's, say, repatriation requirements for stock sales if you're in China, or specific reporting thresholds for large payments in Germany, or qualifying for potentially favorable tax treatment in Israel. It's just a whole different level of complexity compared to simply getting a paycheck.
Definitely sounds complex. Okay, so to kind of bring it all together then, Unity's Q1 2025 reflects a company that's strategically leaning hard into its new Unity Vector AI platform. That seems clear. They're navigating this period of reduced revenue, but showing some promising gains in profitability through very disciplined, maybe even aggressive cost control. And that includes those significant headcount reductions we talked about. The legal landscape seems to be clearing up a bit on one major front, which is good news, while their global employee equity plans really highlight the intricate complexities of running an international operation and the personal finance side for employees.
Yeah, that sums it up well. Unity is clearly placing a substantial bet, maybe the bet, on its AI-powered Unity Vector business as the core of its future. So as you think about how this might play out, maybe consider this. What kind of ripple effects might a successful, or for that matter, even a struggling Unity Vector have on the broader ecosystem? You know, the whole world of real-time 3D development and the countless companies, big and small, that rely so heavily on Unity's engine.